Hey everybody, Boris House for BK Forex. Welcome to our Forex Weekly Technicals for 05/19, 05/24 of 2014. Where are the trades? Well, after crying for a month about no volatility, we finally got volatility over the last 2 weeks. Certainly in the euro dollar, which dropped about, I guess, almost 300 points off the highs, a little bit more even actually. Did find support, as we had talked about earlier, this 36.50 level for the time being, or a little bit ahead of it, and did bounce back. But the bounce back has been very anemic, really, until and unless euro clears 37.50 and closes above this level. You have to believe that the downside pressure is pretty enormous at this point, and the possibility certainly of a retest of 36.50 and possibly a break here down towards the 36, ultimately towards the 35, very much is possible. So we could be having just sort of a elevator to the downside move, a staircase to the upside, elevator to the downside kind of a move. And this is certainly not a time to, in my opinion, to get heroic about trying to find bottoms over here. This 30, unless you basically just sort of want to take a punt on the fact that these are the lows that have been made, and just simply put a stop around 36.30 or so to see if you can catch the bottom here on a relatively lucky guess. That would be okay. But trying to average down into this position, I think, would be a really fruitless exercise, because we could have a distribution all the way down to 3,500 before the euro finds any kind of meaningful support. To the top side, the upside here. The other thing is, by the way, even if you're buying here, how much upside do you really have? That's really the critical thing. Does the euro really find a base enough to want to rally through this 37.50? For the time being, basically, as always, it's been a sell the rally mode, pretty much just like it was a buy the dip mode all the way through here, and even all the way through here in some ways. Now we're in a completely different mentality where it's really sell the rally mode, and until and unless euro begins to close above here and starts to really come back towards the support level of 38.50, it looks to be in a long-term downward pattern, and that's how it structures. Let's take a look at dollar yen. Was actually, I think, the big surprise, and I think is setting up to be a big surprise in the currency market, simply because everybody and their mother is long dollar yen. Everybody thinks dollar yen should be at 105, 110, given the tightening of the Fed, given the acceleration in the U.S. economy, and yet U.S. rates are lower, not higher, lower. We continue to have very, very low U.S. rates. We continue to have sort of a Japanization of the U.S. economy, and people are bewildered at the fact that we don't have higher rates, higher yields, and therefore higher dollar. And in fact, the irony of the whole thing is dollar becomes the new yen in some ways, as it continues to kind of drift lower here against the yen itself, and basically declines against the euro and the pound for these particular reasons. For the time being, technically, this 100, 101 level still is the critical support, and until and unless it's broken, you have to trust the fact that the base is, still remains in place. Basically, in many ways, the trade now is that as long as we hold 2.5 on the 10-year, we'll probably hold 101 on dollar yen. But it's under threat, and there's a lot of potential here for a very, very vicious little liquidation. Because remember, if you can break the 101s, break the 150s, there is massive, massive amount of stops at the 100 level, and the battle between the longs and the short is going to intensify. We could have just a straight down day of a couple of hundred points to the liquidation before the yen does find some support. I do think that, of course, underneath 100, this becomes an incredible value, and it should probably does find some support, at least on a near-term basis. Let me just go back, actually. Let's take a look at longer-term charts, because looking at the 100 now, it's been a while since we've been there. So this is former resistance, now support, which is why we kind of are in this position. But the 100 level also provides. Let me just clip it here. The 100 level also, this was a big resistance now over here that finally broke through, and then another resistance point here that corrected and then finally broke through over here. So you got to believe this 101, 100 is going to have to find a little bit of support here in dollar yen if we break to the downside. But the fact is that we're not talking really about distribution to the downside, not any kind of a move to the upside. Indeed, the yen really needs to retake the 102.50 right at this level over here and hold it in order for us to get a lot more comfortable to the long side on the yen. Pound is just kind of traveling nowhere. The BOE this week basically communicated the fact that they don't want to see a high pound, that they're not going to raise rates anytime soon. So cable is really going to be trading really on off dollar weakness in some ways, and it seems to be doing its typical race up, consolidate, and kind of churn up a little bit. The downside here, 66.50 is the really big support. There may be, further distribution to the downside here in cable, and if it is, where the real support is right over here, where we had a former resistance. Now it was a spike low support here, out of which we broke down, and I think this will be much more meaningful. So a buy point at 66.50 to 6600 probably is going to meet a lot more buyers here on a value basis as cable kind of distributes. But whether we get there is another story. For now, we seem to be stabilizing 6700 and maybe churning back up for a possible double top. We'll have to see how cable trades over the next couple of days in terms of its formation. What is looking better, ironically enough, is COM dollars. Aussie certainly looks relatively decent and holding really nicely above this 93.50 level. Continues to outperform everybody on a relative valuation basis, and looks like it still continues to hold this consolidation between 93 and 94. 94 clearly a very big challenge, and we would need to see some further dollar weakness for Aussie dollar to kind of run all the way through towards the 95 level, at which point I think the RBA is going to just blow a gasket. But for the time being, there's enough buyers here. Aussie still one of the few quality yields in the currency market, and Australian economy really under no pressure to lower yields for the time being. So the market is very, very happy to park its dollars in Australian dollars versus the lower yielding U.S. assets, which continue to deteriorate every single day in terms of a yield basis. Kiwi not acting as well. Kiwi is just really a victim of RBNZ's very aggressive talk-down strategy. RBNZ is willing to raise rates, but it's not willing to have a high currency, so it's got to do one thing, and it's threatening intervention. Something has to give, and clearly the market is now taking them more or less seriously. We have a very, very significant distribution top kind of building here for the time being. But really, if you look at it more carefully, it's just as easily a consolidation stage. The point is, this is not really what I mean to say is that this is not unequivocally a negative formation, even though it looks to be that way. Because what you can discern from this point is that basically this is just a consolidation. We had this big move up to the 85s, consolidation in the 85, 87s, and unless and until we break 85s with conviction, 85, 50s with conviction, sort of we close it at below 85. You can't really make an argument that Kiwi has made a full-on top. It's much more accurate to say that we're just in a consolidation mode. So one possibility here is that if you think the COM dollars are just not going to buckle at all, you're in the lower end of the range here, and it's a relatively decent trade here with minimal amount of risk, where the risk here is probably about 100 points maximum to the downside on a positioning basis. Still, Kiwi faces pretty stiff resistance here at the 87, 88 level. If they do raise rates, the critical thing is going to be what they're going to communicate at the next meeting, and whether they're going to threaten any sort of intervention, and that will be the reaction of the market. If they're sort of all bark, no bite, then you do have a potential here for Kiwi to go a little bit higher. And dollar CAD last on our hit parade here is again just I think getting a little bit of a benefit from the COM dollar trade, less so from its own organic situation, which remains essentially in the cellar. I mean, it's actually quite ugly at how weak the Canadian economy has become. The BOC has basically said they're going to keep rates effectively at 1% for as long as far as the eye can see. But the story here is less about Canadian weakness and much more about U.S. weakness. It's the fact that U.S. yields that continue to deteriorate has created this massive distribution top in dollar CAD. Having said this, though, for now, clearly the 108 is a key support level, and if we do get any kind of rally in U.S. yields, this dollar CAD trade actually becomes a relatively interesting buy as the yield differential between the two becomes more important. So for now, if you're bargain hunting, this low level over here at around 108 is pretty much your support level. It's relatively close to where we're at, so the risk is kind of minimal. But if we do start breaking down to the downside here, we could really unwind much more towards the 106, 105 level, and that would be a big shock surprise. What that would really foretell basically is this shocking surprise of dollar weakness in 2014. Certainly that's what the charts are telling us, even though the fundamentals are not quite supporting it. And when you have a divergence between charts and fundamentals, you got to trust the charts that they may be communicating something that we're just not seeing yet fundamentally. So the net takeaway from all of this conversation for the week is a dollar certainly remains weak against the yen, against the COM dollars, and the euro is just simply in a battle to the last place with a dollar as far as who's going to be the weakest amongst the major currencies. Wishing you guys the best of luck and the best of trading. Over and out, and